to Investing with Stef YouTube channel, and today we're going to talk all about gold and why I'm invested in gold and why you maybe can have a look at gold. Now in this channel we talk all about investing, we give you information to be a better investor, and we just have a one-on-one conversation, and maybe you find some good value in here that you can use in your investing world. Please bear with me as I'm going to show you some charts, and I'm also going to take each point, about 10 points, and I'm going to dissect it a little bit. So you might want to watch this video in about 1.25 speed. So let's go to the first chart that I want to show you, and this is one of the reasons that I'm invested in gold, because the thing is, gold has outperformed the S&P 500 over the 20 years. Now if you don't believe me, let me show you this chart. So it only goes until 2018, and this one, let me just shrink my big melon, only 2018, and you can see here, if you bought gold in 2000 and hold on to gold, you would have been up by 345%, where the S&P 500 only 70% at this time. Now in the last 2 or 3 years things have changed quite a lot, but just according to this, you have done pretty well. Now the first reason I want to talk about why I buy mining shares and gold mining companies is because compared to their asset value, they are highly undervalued. What do I mean by that? So if you would take the assets of the company, like the mines they have and the ground they have, the gold in the mine, the gold in the ground, and you minus their debt, right, you get to their net asset value. If you take their net asset value compared to their market cap, how much they are trading at, they are 0.5 to their net asset value. So some 0.8, some 1 to 1, but historically they have been trading at around about 2 to 3 to net asset value. So just compared to that, they are super undervalued. That's number one for me. Number two, the miners compared to the S&P 500. Now that was miners compared to miners. Now this one is miners compared to the S&P 500. This one is a Sprott. I just found this one quickly. It's a reputable source, that's why I found it. That the aggregate price to earnings of the whole S&P 500 is around about 27.9 PE ratio. So it will take you, if the companies don't grow, it will take you about 27 years to just get your money back. Where companies like mining companies right now, producers, not explorers or developers, only producers, they are trading around about 4, 5, 6 PE. So you can see, just compared to the S&P 500, they are highly undervalued. Point number three, why I'm investing in gold mining stocks, is the national debt of America. Now let's look at the national debt of America. Here you can see it's still running, is at around about $29 trillion. Just USA. Now every country has got their own amount of debt, but the America is highly leveraged to the debt, as they are the reserve currency. Now this is only the debt that's on the books. It's not the debt that's like unfunded liabilities, like Social Security, Medicare, the welfare programs, all those type of. They say it's around about 150 trillion, but okay, it's an arbitrary number. Let's stick with 29 trillion. That is just America. Now, what does that mean? That means that every citizen of America, when they get born, they have over $100,000 of debt just by that they own. The public debt to GDP ratio is about 100%, like 98%. That means if you have a $10,000 credit card, or if you make $100,000 a month salary, you spend $100,000 in debt. So that's how much you are in debt. So you get your money, you pay off your debt completely like that. So how long is this going to last? Another thing is the world debt. Global debt is fast approaching record 300 trillion. I don't think this is sustainable. Think about this, right? If you would take 1,000,000 seconds, right, and you work it into time. Let me put myself here so you can see me. 1,000,000 seconds. You take 1,000,000 seconds, you work it into time factor, and you go back in history. 1,000,000 seconds is about 12 months, roughly, right? 1,000,000,000 seconds backwards is about 30 years backwards, right? If you take a trillion seconds, and you go back in history, that's 30,000 BC. So 30,000 years backwards. And that's the difference between a million, billion, and a trillion. So if you're talking about 300 trillion, the whole world is in there. That is an astronomical amount. And I don't think this is sustainable. So people are going to start worrying. Maybe this hyperbolic debt bubble is going to burst. And then what's going to happen? So people are going to revert to solid money and money that's stood the test of time of 5,000 years, and that is where people are going to move to hard assets like gold. Now we'll get into that a little bit later. But number 4, most central banks are loading up on gold right now. I just read an article about Turkey and India. For 13 months they didn't do much, and then all of a sudden in 1 month they like almost doubled, or they added a lot of gold to their central banks. Central bank holdings. Russia has been getting rid of all their paper dollars, and they're just holding on to gold, to euros, to yuan, and to physical assets. And they have a female running the central bank, and I think she's doing a fantastic job. I have an article here that we can look at the first half of 2021. All central banks have added 333 tons to their holdings. Even Canada. And here you can see, this is from Kitco. Recently it was reported that Brazil's central bank purchased over 62 tons of gold. Just Brazil. And it's not so interesting, but they only did it in 3 months. So they've been ramping up their purchases. And if central banks are holding gold, I think we should be purchasing gold, or at least gold mining shares that's tied to the leverage of gold. Here you can see that Hungary, Thailand also included, with an increase of 214 tons, just in a 39% increase year over year from 2020 to 2021, just in Q2. And then many other things here. You can see the total global demand for bullion and gold coins amounted to 594 tons. So that also has been going up. And recently I heard that China jewelry sales have been skyrocketing. Okay, number 5. The dollar is strong compared to other currencies. What do I mean by that? Yes, the dollar, all currencies around the world are losing value as we are speaking, because the central banks are putting more currency into the economy and devaluing their currencies. So things are costing more. Yes, but the dollar is losing more value. Here you can see the Dixie. Now the Dixie stands for the dollar index. It's a future market that's trading, that's tracking the dollar compared to other currencies, and it's trading at 95.4 now, where 1 to 1 would be great, or 100 would be great, and 95 would not be great. But this is really high for the American dollar. If you look here, over the past year, actually if you go back, you would see the dollar has been trading at about 90, or even less than that, sometimes 80. So 95 is high for the dollar, and it's going up right now, but I think it's going to go down. What does that mean? When the dollar goes down, gold goes up. Recently, the dollar has been going up and gold has been going up. So that correlation has not been tracking each other, and they're not congruent. So it's good for gold. Gold is staying strong in this environment, and it's really good for gold. That was number 5. Hopefully the dollar will come down and gold will go up, or even the dollar will stay where it is and gold will still go up. And I believe it will happen, something like that. Number 6, mining companies have little to no debt. At about 1,000 to 1,100 all-in sustaining cost, they are making a huge amount of cash flow, because at the moment gold is trading at about 1850, around about there. So they are gouging, or they are hoarding cash right now, and with that cash they can then acquire other companies or expand their mine, because gold mines are a dying company. If you think about it, every day they are taking out resources out of the ground, so they need to replace it. With cash they can do that, so that's a good thing. In the past, in 2011, the bull market pretty much ended for gold, and the gold started going down. But before that, all these companies like Newmont, Barrick, Kinross, most companies have loaded up on debt, and they also to acquire other companies at a high valuation. Then when the gold price went down, they were stuck with all these assets and they didn't know what to do with it. So some of them took a loss and some of them let it go. Some of the companies let it go at a discount to what they bought it at. So they made bad acquisitions, where now they are not making that bad acquisition. So they are in a much stronger position as we are speaking. And also their balance sheets are way stronger than what they used to be in the past. Actually, the strongest that a lot of people have seen it in the history. So that's another reason why I look at gold and why I own gold mining shares. Number 7, U.S. trade deficit are at all-time highs. If you see the United States are exporting out of their country around about $207 billion worth of goods, but they import 280 billion. So they have a deficit of 80. You can see it. They have a deficit of 80.9 billion, a record deficit in the month of September or October. Sorry. So that is gonna affect America a lot, because how long can you keep on with this importing more than what you export? That means your economy is weak. Another thing about that is, in the past, if you listen to Peter Schiff, that I highly recommend you do, in the past, the stock market has gone down when the deficit has gone up. People realize that, the economy is slowing down, things are not happening good for the economy, so the stock market is going to come down, so I better have to get out. And that is what happened with the trade deficit. At the moment, there's a big disconnect again, and I mean, it's all the liquidity that's going into the economy from the central banks, but the deficit is increasing, and there's something called the twin deficit, and that is even worse. But this deficit is the most critical one that we have to look at, and that's why gold is going to go up. People are going to go again to hard assets. Number 8. This one is the interest rates. Now, there's something called the real interest rate, and there's a nominal interest rate. Nominal interest rate is what you see on the 10-year yield right now. It's around about 1.63. Pretty high, it's going up. If you take 1.63 minus the inflation rate, you get to the real interest rate. Now, if you take 1.63 minus 6.2, what the CPI is saying right now, you get to around about minus 4.6% that you are losing purchasing power, or if you were buying this bond, if you give your money to the government. That is a bullish sign for gold. Gold is always perform really well if we have negative real interest rates, and yes, that is another strong reason to own gold. And why? Because gold is going to go up, the mining shares will go up 2 or 3 or 4 times on top of that. And also, people are like, why the real estate doing so well? Because the real estate interest rate is at the lowest at the moment. I mean, it's 2, 3, sometimes fixed rate, 3%, where in the 70s and 80s and 90s, it was at 17, 10, 12, 15% interest rate. So, yeah, people are buying all these assets. And eventually, when that debt is going to come back to roost, people are going to run to solid money. The last one, or the second last one I want to talk about, is gold and gold supply. Over the last, let's say 20 years, not so much money has, or let's say the last 10 years to make it safe, money has not go into developing gold assets to discover they actually don't find big deposits anymore. So yes, gold supply has not go down much, but it's been stable and slowly increasing, much slower than what it should. And that means that there's going to be less supply and higher demand for all the reasons that I just mentioned before. So that's also another catalyst to push gold much higher. If you stayed this far, I want to say thank you so much for watching this video. I hope that you found a lot of value so far. I have one more point to cover, but I just want to remind you, please go ahead, like, subscribe. I know sometimes I watch a video and I don't subscribe. I must be fully honest, but even if you don't subscribe right now, just go back, look at some of the videos. put comments down below. Tell me what I can do better, what I can do less of, what I can do more of. I would really appreciate that. And yeah, let me know what you think about gold, and if you find some good, interesting things that can benefit me, can benefit you, can benefit a lot of people out there, and how to preserve their wealth. The last point I want to make is from Rick Rule. This is number 10. Rick Rule has one thing that I really admire a lot, and that is his way that he can articulate things. The one thing that he says is, gold does not have to outperform all the assets in the world. It doesn't even have to skyrocket. It just needs to move back to its original position. Meaning, what do I mean by that? It just needs to revert back to the norm. In history, in the past, institutions and wealth management funds and what do I call it? Family funds, family houses, averagely used to own about 2 to 3% of their assets in gold and gold mining shares, right? At the moment is half of 1%, so meaning 0.5% of their assets are in gold and gold mining shares around the world. So even if they would just go back to what they historically used to have, gold is going up at least 2 or 3 times, or even just 2 times. And for gold to go up 2 times, mining shares are going to go up 4, 5, even 10 times. So all we need is to sit back and wait for these funds to get back into gold, and we will do extremely well. If you have picked the right mining shares, go back to my videos. You will see that I did some videos on how to help you pick the right mining shares and where to start. Look at other videos out there, will help you a lot. Other than that, I just want to say thank you for watching this video. I really appreciate it, and I hope to see you in the next video. And enjoy your digging, enjoy your research, and see you soon. Bye bye.